My name is Haygood. If you can get my first name, most people are doing pretty good because both of them are kind of weird. I'm with Fisher & Phillips. I'm a labor and employment lawyer. All I do is represent management side. Rochelle and I, who work together, do not represent employees, though we're often dealing with employee issues. We spend a lot of our time on employment litigation, a lot of our time on union avoidance issues. But the bulk of my time these days is spent on training and proactive efforts to try to help companies like yourselves stay out of trouble, because most people realize that if you can find a way to prevent or stay out of trouble, you've saved yourself a ton of money. You know, the average lawsuit these days, particularly when you're talking about discrimination or FLSA or wage and hour or something along those lines, probably costs you anywhere from $100,000 to $200,000. You could spend that, maybe more, win. It doesn't really feel like winning, does it? You spend that kind of money? So I would encourage you to give some thought to how we can be proactive, and that's what we're going to be talking about today, specifically with respect to Fair Labor Standards Act type issues. One of the things that we have seen happen, let me make sure I'm doing this right. Yep. One of the things that we've seen happen lately in the realm of FLSA, which is the federal law that has to do with how we pay our employees, dealing with the minimum wage and overtime and things of that issue, is that we are seeing a huge explosion in collective action litigation. Now, collective action, everybody's heard of class action lawsuits. When you get into the Fair Labor Standards Act, they call it collective action, but effectively it's the same thing. It's a lawsuit brought by a whole big group of employees. And I jokingly say sometimes that this started in California, where all sort of bad employment ideas begin, and then moved across the country to Florida, where they seem to grow even further, and then they spread throughout the rest of the country. And that's exactly what's happened here. This explosion in collective actions took place in California, now in Florida, now all over the country. Every day, Rochelle and I get a list of all of the employment lawsuits filed across the country, and we now see FLSA and collective actions are the biggest chunk of those lawsuits that are filed almost every single day. And it used to be they were mostly in California and Florida. We're now seeing them everywhere. When I started practicing law, I never thought that a South Carolina boy would be handling collective and class action lawsuits. I've probably gotten 8 or 10 in the last 24 months. So it's now becoming an everyday occurrence for employers in South Carolina, as well as for those of us practicing law. Now, you might ask yourself, why is it that and by the way, when I say ask, if y'all got questions as we go through, interrupt me. But you might ask yourself, why do we see this big explosion? And there are a couple of reasons. One is there's a huge increase in the understanding of the law. I find many times when I'm training supervisors and managers that I quickly realize that the employees in that organization have a better understanding what the law is than the supervisors and the managers. Does anybody know why that is? This is audience participation part. Okay. Television, radio, and internet. Internet is really the key. When you go on the internet these days, in almost every industry, there are blogs and chat rooms targeted at your employees, and if you find them and go on to them, you'll find they're not on there talking about how wonderful you are. They're on there talking about the things they think you're doing wrong. The plaintiffs' attorneys across the country have now realized that these are out there, and they're out there chatting them up and trolling for cases. I mean, it is absolute. They're Facebook friending people, all kinds of stuff to try to find these cases. But they're getting educated. So I think that's a big key part of it. They're also easy to replicate. What does that mean? Well, if you're making a mistake on how you calculate overtime for one of your employees, you're probably doing it for all of them. So they can bring one lawsuit, the effort to bring one lawsuit and represent 100 or 1,000, or in the case of Walmart, hundreds of thousands of people, and bring the same claim and collect enormous amounts of money. When I say collect enormous amounts of money, it is very easy to make mistakes in the FLSA arena. If you do make a mistake and you're found guilty, maybe you only owe the employee $100. But if you're found guilty, you're going to have to pay liquidated damages, which means they're going to double that. And you're going to have to pay the attorney's fees for the plaintiff's attorney, which I promise you are going to be $50,000 or $100,000 if you're lucky. So the $100 is going to seem, minuscule compared to what you're going to have to pay later on. Many times, I've got a case going on up in Minnesota right now where the cost of defending the case, a collective action lawsuit, the cost of defending the case and the potential for having to pay their attorney's fees far eclipses the total potential liability. So my client is having to face, do I want to pay, fight for principal here? In other words, pay the lawyers an excessive amount of money, or do I want to compromise my principles and settle with the individuals? It's not a good choice for him, but from a business standpoint, my guess is he's going to decide he's got to compromise rather than fight this and go forward. We're seeing these lawsuits outpace every other type of litigation. You go and read articles on the internet now, you'll see that they say the explosion in FLSA lawsuits is up 300 to 1,000%, depending on what the recent time frame you look at is. So this is the probably hottest topic in the area of employment litigation.
Hey, good. Can I stop you 1 second?
Sure.
Since it is possibly the hottest topic, I need to say something. I think some of your notebooks have your slides and some of them don't. So we will get you your copies, but I want to encourage you to go ahead and take copious notes while you can, and then we'll bring you the copies.
So we didn't just give them to the people we like.
Copies in your notebooks, would you raise your hand? Okay, we apologize to you. We'll get you a copy, okay?
It's not, that's all right. It's not that we don't like you or anything. So this is a very hot topic. It is something that I encourage you to pay attention to. Now, we only have a fairly short time period today to talk about the FLSA. I did a program yesterday that was supposed to last 90 minutes, and it went even longer than that. And I know your next topic is managing your attorneys, so I'll try to manage my time here. What I want to do is hit on a couple of things, and I'm going to go through some of the things in the materials, and I'm going to skip over some just so that you'll have them. One thing I would encourage you to do as you head back to your workplace is to conduct your own self-audit on whether your pay practices are being handled properly. We're not going to really go through enough information today for me to tell you how to do that entirely, but on our website, which is laborlawyers.com, there are free webinars, free. Y'all got that part right? Webinars. There's one on there on the Fair Labor Standards Act, where you can go on and spend an hour watching it, and that will equip you well to go back and audit your own pay practices to be sure that you're doing it properly. I'd encourage you to do that, or have somebody in your organization do it, because you might go and find some things now that will save you hundreds of thousands, maybe millions of dollars later on. The first category I want to talk about is, are they employees or are they independent contractors? Under the law, the statute doesn't define employees and it doesn't define independent contractors. We are seeing a large explosion in litigation over this issue, and it's coming up in some strange ways. I've got a client who had about 500 independent contractors that worked for him, and one of those independent contractors left or wasn't getting work like they thought they should, went to the then Employment Security Commission, now Department of Workforce Development or whatever, applied for unemployment, and that started this whole big investigation into, should these 500 people be employees or should they be independent contractors? And as it turned out, the Employment Security Commission determined they should be employees, which meant that they had to make major changes. Can you imagine moving 500 independent contractors onto your payroll? The benefit costs, the tax costs, they had to go back and pay unemployment premiums. It can be significant. So you want to take a look at your independent contractors and decide, do we think we're handling them properly? There are some things that really don't matter. You know, whether we call them independent contractors or whether we call them employees or not really doesn't have any effect on whether they are. The real question is, what is it that they're doing? How is our relationship with them? And the most important thing is, who's got the control over how they're going to perform their job? You know, the traditional independent contractor, and I realize you guys probably are mostly dealing with truck driver independent contractors, but the traditional independent contractor is somebody who is in business for themselves, is doing business for you and for others, has got their own equipment, is paying their own business expenses, is paying their own taxes. Everybody understands that they're an independent contractor. And when you give them a job to do, they figure out how they're going to do it. The timing of when they're going to do it, the method in which they're going to do it, who's going to do it, who works for them that might do it, and things of that nature. What we find many times is, particularly in this economy, is people are laying people off or terminating employees, and then they're wanting to bring them back on a 1099 basis to perform basically what they were doing before, but they have been told not to add employees to the payroll for budget reasons or whatever else. And when that happens, you've now got somebody you've issued a W-2 to and a 1099 to, and that's a huge red flag with the Department of Labor. So I'd encourage you to take, I've listed the factors on here, but I kind of ran through them already. Those are things I think you need to be thinking about. A few tips when we're looking at independent contractors, and I've tailored this more for trucks, but it applies for all of them. Ideally we like to see our independent contractors owning and maintaining their own trucks, running their own trucking business, which means they should have their own tax ID numbers and things of that nature set up for that. If they're hiring assistant drivers or people to work with them, they're doing that as opposed to you. They're being paid in a method that shows that it's really something that's being charged to a particular account other than just a payroll. They're not closely supervised, meaning we're not spending our day in and day out monitoring them just as we would if they were our employees working for us, and they're allowed to work for other companies. I also like to see independent contractor agreements put in place. They are not determinative, but they help. They help a lot. Now I'm going to skip on to the next subject, but before I do, questions about the independent contractor issue? Oh, it is almost impossible to have your office employees as independent contractors unless they're coming in to do a specific project. Like you might hire somebody to come in and do an upgrade to your IT system that's going to be a 1-month project or something, but almost impossible to make your in-house, inside office administrative types independent contractors. Now you can contract out things like billing and stuff like that, but it's very difficult to do that, almost impossible, I would say. Other questions on that point? Another thing that we're starting to see a little bit is, and I put this in the category of off-the-clock claims. We are seeing more and more litigation right now involving employees who claim they are not being paid for the work they're doing. I've just gotten in 2, I think, collective action lawsuits, one in New Jersey, one in New York, both under federal law and under state law, involving employees who claim that they were doing work they were not getting paid for, who claim that in some of these cases, claim their supervisors were going in and adjusting their time because they were trying to control labor costs. Does that sound like how we're supposed to be controlling labor costs? The law says, this is pretty basic, we got to pay people for all the work they do for us. And you can't control your labor costs by just not paying them. You got to control your labor costs by not having them perform the work. But sometimes, I was in a facility yesterday in southern Mississippi where they had a big sign up on the wall that said one of our 2010 goals is controlling labor costs. And if the managers of that facility are doing it by just cutting people's hours without paying them, you got a serious problem. It's even more serious because many times there's documentation that shows the cuts. So it's very easy, once they get the documents, the plaintiff's attorneys to prove their case. In that same realm, how many of y'all are paying on a per mile basis or similar basis with your drivers? A number of you. There have been some litigation that's starting to crank up. There was a case recently involving Domino's, who I didn't handle this case, but I do a lot of their work for them across the country. And in this particular case, Domino's was paying their drivers on a per mile basis, and then they changed and decided that for all time other than actually driving, they were going to pay an hourly amount. Okay? Does anybody do it that way? Nothing wrong with that, but they were going to pay an hourly amount, and this may have had something to do with trying to comply with some California state laws, which are, impossible to comply with. And what the lawsuit basically said is, because you're now paying us by the hour for this other time, you must not have included waiting time, inspection time, and things like that to be included when you were paying me by the mile. But that's your intention, isn't it? When you're paying people by the mile right now, you assume that covers all of their time. Under the law, we call that piece rate. But basically, as long as when you add up all the money you're paying them and divide it by the hours they worked, including waiting, inspections, and things like that, as long as it hits the minimum wage, not a problem. But what I would suggest to you is that if you're paying this way, that you take a couple of steps to be very clear in your communications with the drivers on how you're being paid and what time is covered. And if you're only paying by the mile, that it covers all of the time. And I'd give examples of that: waiting time, inspections, whatever else. I don't usually recommend contracts with your employees, but you could have those. Some people do. Policy manuals, things of that nature. You also want to be sure you keep track of the hours worked. You're required to keep track of all the hours that they're working every week, so that when the Department of Labor comes in to conduct an inspection, they can confirm that you are paying at least the minimum wage on that. All right, questions about that? Just looking, I'm not checking my email, I'm checking to see if I'm on time here. Oh, sorry.
You are talking about hourly paid employees, right? Not salaried?
Yeah.
Okay.
Yeah. Have you got salaried truck drivers?
Yeah.
And how are you qualifying them under a salaried basis?
Production, primarily.
The year's past production, an average.
And running an average and not keeping track of their hours? Now, there's an exemption for overtime, but I'm not sure what category you'd be fitting them in to be qualified as exempt.
Well, under the Federal Motor Carrier Act,
Right?
those are automatically exempt if they transport across state lines.
They're exempt from overtime, that's correct, but you still have to pay enough to hit the minimum wage requirement. So you can pay them a salary as long as the salary hits the minimum wage, which I feel confident it does. Is that what you mean?
Yeah.
Okay. And that's fine. That is an exemption, which I have a slide on here, I think, coming up under overtime pay. That is, but what you have to understand is that when we talk about exemptions under the FLSA, there are exemptions from overtime, and then there are exemptions that exempt you completely from the FLSA and the minimum wage requirement. Here, we're not exempted from the minimum wage requirement, so you have to be sure that in each week we are still paying them enough so that if they had an 80-hour week, the salary would still cover it. Does that make sense? Okay. Overtime pay. We see lots of violations that come about from an overtime pay standpoint these days, dealing both with employees in the office as well as other types of employees. And these overtime issues arise because sometimes employers don't realize what all has to be taken into account when you're paying overtime. And one of the examples of that would be if any of you have an attendance bonus or some other incentive bonus type program for employees who are, and we're talking about non-exempt hourly paid employees, if you pay any sort of bonus like that, you have to take it into account when you're calculating the overtime. Does that make sense to you? So let's say you got an employee that works in your office and you're paying them $10 an hour. They work a 50-hour week, and you give them a $50 bonus for that week. You have to add $1 to their base rate, taking it from $10 to $11 for that calculation of overtime. So overtime will be 150% of $11 instead of $10. Now, the bonus is spread over the period on which you're awarding the bonus. This sounds complicated. I assure you, your payroll software probably will do this for you automatically. And we have some white papers on our website that will walk you through the explanation of that calculation, or I can email it to you if you need it. But overtime is one of those things we want to be sure that we are doing properly. Some things can be excluded, vacation time, basically any time that is not worked can be excluded from overtime. All right, I'm skipping over. There's the motor carrier exemption you were talking about just a second ago that deals with overtime issues. Oh, one thing I do want to point out, we have seen where some companies have got lots of different types of vehicles that their drivers are using, and sometimes the drivers are using vehicles that are under 10,000 pounds. Remember that when they're driving those smaller ones, the motor vehicle exception does not apply, even if they're still engaged in some sort of interstate commerce. Yes, ma'am.
Question for you. Are you seeing a lot of cases concerning the jockeys or the hustlers and overtime?
You mean because they're counted under the exemption? Because is that what you mean?
Not, depending on what they're actually doing.
I have not seen a lot of those cases, but I think you're going to see more of that type of thing because the Department of Labor is now focusing in very closely on, when they go in and do an audit, at what the actual duties of the job are instead of just what the job is. Now, as long as those people have some degree of involvement in the safety aspects, the Department of Labor historically has not required a significant percentage of their job to qualify as the exemption. But my guess is in this administration, you're going to see them tightening up.
Well, yeah, we've had a couple of issues come up where we've always based our decisions on whether or not they are essentially going off the yard. More recently, we had an issue come up with the Department of Labor in Georgia where we were quoted they have to be essentially off the yard more than 20% of the time in order to be exempt.
So they've adopted a rule of thumb along those lines, I guess.
This particular investigator did. It was the first
Well,
time we had ever heard it.
one of the things that we have found when dealing with the Department of Labor lately on lots of different issues is these rules of thumb are being adopted by them in different parts of the country and not in other parts of the country. The Department of Labor is also in the process of revising their field operations handbook and their own internal guidance. So we're told, they've told us a lot of the rules of thumbs that they have been using in the past, they're not going to be using going forward because they're going to get even tighter. So I do think that in any area where you've got somebody, and this might be an expensive recommendation, so I think you got to look at it carefully, but if you've got people that are in a gray area where we're really not sure we're going to be able to defend ourselves on the exempt classification, I'd make them hourly and control the time. That's what y'all did? Okay. Other questions about that? Okay, meals and break periods. I'm not going to talk about this a lot. There is no federal law requirement that we provide meals and break periods for the average employee, but what I do want you to understand is where we're seeing the litigation arise now is when people automate things. And by that I mean you automatically deduct a 30-minute unpaid lunch from your hourly employee's pay. Does anybody, maybe I don't want to ask that. It's not illegal to do that. I don't think it's a good idea to do it because what's happening is whenever you automate your pay system instead of basing it on actual time records, many times it's not accurate. So there have been some lawsuits, quite a few lawsuits filed lately where people automatically deduct the 30-minute meal break from their hourly employees, don't pay them for it, but the employee is actually working through the lunch period. And, you know, for it to be an unpaid meal period for your non-exempt employees, it has to be 30 minutes and uninterrupted. So I'd encourage you to pay careful attention to that. I've also seen people who are using time systems where people clock in when they get there and clock out when they leave, but if they clock in early or clock out late, the time system defaults to the time they should have started work based on their schedule. Now, what does that mean? That means we now have a time clock, and it's amazing how many people do this, a time clock and a time system that's really not keeping an accurate record of the hours worked. So I'd encourage you to be watching that carefully because this is a hot topic, particularly it's even more of a hot topic if you've got operations in California where there are significant requirements on meal and break under state law.
Hey, good. I have one question.
Yes, sir.
Can you force or mandate a break
Yes.
and coordinate that with the time clock automatic?
I would rather you force it and make the employee clock in and out. Does that make sense? But now let me make sure we understand. It's meal periods that can be unpaid, at least 30 minutes. But other breaks, smoke breaks, things like that, can't make those unpaid. So, but you can force a 30-minute unpaid meal break, but it must be uninterrupted and 30 minutes long. So we can't have them answering the phone or...
At minimum 30 minutes? Or?
Yeah, it could be longer. It could be longer.
And what if they're not on site?
That makes it much more difficult to keep track of. You know, I've got, not in your industry, but I've got some clients in other industries who control it through their dispatchers. You know, where they are dispatching people from one to another, and when they call in to say, I finished with this delivery, then the dispatcher says, okay, you know, now is your 30-minute or 1-hour break or whatever it is, and then they don't give them their next assignment until they get it, and then they can monitor it in some through GPS to see, you know, in fact, whether they're staying in one place or not. All right. Other questions about that? Another area we get a lot of, how am I doing on time? Another area where we get a lot of questions has to do with trainings and meetings. You send employees to trainings and meetings, it has to be paid. You have to pay them for that time. Again, we're talking about non-exempt employees, hourly type employees. You have to pay them for it. You don't have to pay them if it's outside of work hours, voluntary, they don't perform any work, and it's not related to their job. But I don't know why you'd send them to anything like that. So pretty much, about the only time this ever comes into play is, let's say you got somebody that works in the yard at one of your facilities, and they're going to get some education to become the controller of your facility. So they're pursuing some education that really doesn't have anything to do with the job they're performing, and they're doing it on their own, sort of a self-betterment situation. All right, exemptions. One of the areas, as I said earlier, we're seeing this huge explosion in collective and class action lawsuit. Non-exempt employees are basically suing because they're not getting paid for their time, or they're not getting their overtime correctly calculated. Oh, and exempt employees, probably like everybody sitting in here, under some sort of white-collar exemption, they're suing because they're claiming they should not be exempt. And where we run into the problem here is, let's say you've got an assistant supervisor of something, and the assistant supervisor is putting in 50, 60, 70 hours a week, and he gets laid off, fired, terminated, whatever, and then he goes and sits down with the plaintiff's attorney to discuss his case. And what plaintiff's attorneys do now is they have a questionnaire that they go through with you to discuss your case. And many times people come in, the plaintiff's attorneys I know say they all come in, everybody comes in saying, I was discriminated on the basis of my race, sex, national origin, or one of the protected classes. But several plaintiff's attorneys tell me that most of the cases they end up bringing on behalf of those people are wage and hour or FLSA cases. Because as part of their questionnaires, they ask them, how are you paid? Were you paid for all the time that you do? I was with a client yesterday that I mentioned who conducted an integrity survey, is what they call it, of all of their employees. And one of the questions they asked is, have you been paid for all the hours worked? And about 10 or 15% said no. Now, that's a great tool, and I'd encourage you to do some surveys like that to find out what's going on in your organization, but don't do them unless you're ready to act on the information. These guys are out working on it right now and going to fix and pay anybody for anything that wasn't paid. You conduct that survey and do nothing, and you've just created some great evidence against yourself that it was now willful. Okay? So you want to, I think these sorts of surveys are a great idea, but you want to be sure. Does everybody understand what I'm saying? Okay, so treating employees who are exempt or is not exempt. I'm not going to go through all of the exemptions, but there are a variety of exemptions that come up in the white-collar arena. These have to do with executive exemptions, probably the one that y'all deal with the most. The executive exemption means that somebody is paid a salary of at least $455 a week. They have got some part of the business that they have responsibility for, could be a department or a section or a warehouse or something like that, and they supervise 2 or more full-time employees at least. Now, when I mentioned the assistant supervisor a little while ago, let's throw the assistant supervisor into that. You've got a supervisor, an assistant supervisor, and a couple of full-time employees. Assistant anything is a red flag for the Department of Labor. Almost all assistant managers, all lead people, all assistant supervisors are non-exempt and should be non-exempt. You got anybody called assistant anything and they're classified as exempt, you need to carefully scrutinize whether that was properly done. The other area where I see people making mistakes is, you know, the CFO or the president or somebody of an organization will say, okay, everybody's got to get their labor cost under control, which I mentioned earlier, And then they tell the employees that, and a supervisor says, well, I'll just make a couple of these employees exempt, and then I don't have to pay them overtime. Well, that's almost always illegal, because if they could have been exempt, they already would have been exempt, and then we wouldn't have to be paying them the overtime. We want to pay close attention to that. Administrative exemption, your controller, if they don't supervise anybody, typically falls into that category because they have a whole bunch of discretion and independent judgment and manage a function of your business. Your human resources manager, your CFO, they could qualify under the administrative exemption even though they may not have 2 full-time employees that they supervise. There are a variety of other exemptions that we've got here. Again, I've got some materials that go through these in great detail, but we just don't have time to go through them all today, but I'd be happy to discuss any of them with you. Anybody got any questions about any of these exemptions before I move on to the next?
I heard a comment earlier about drivers that are paid a salary versus
Yep.
an hourly rate. Would that be a red flag?
I don't think it's a red flag as long as you're still keeping track of the hours and ensuring that we're paying them at least minimum wage. Because you still have to do that. I mean, really what I would be calling these drivers would be, they're exempt from overtime, but they're salaried. I mean, you can have salaried non-exempt employees. Like my assistant that works for me is salaried non-exempt, but she still gets paid overtime and we still keep track of her hours. But you just need to keep track of it, because if you had a driver who worked a whole lot of hours and your salary wasn't high enough, you might find yourself dropping below the minimum wage. But as long as you're monitoring the hours and making sure, it shouldn't be a problem. Yes, sir.
Quick definition of outside sales.
Yeah. Outside sales employees, this is one people are getting in trouble on a lot. Outside sales means that the employee is spending most of their time outside of your offices, calling on customers, taking orders, things of that nature. If they are in your office on the phone most of the time or all of the time, they do not qualify. Is that enough? Okay. Yes, ma'am.
Under the administrative exemption, can you address the one area where they talk about the individual must have independent judgment on matters of significance?
Yes.
Right.
It is very gray. The best example I can think of is maybe somebody that works in your billing or collections department who is responsible for contacting customers, arranging payment, things of that, maybe has got some parameters that they can use to decide whether to extend payment, whether to cut it by 10% if they'll go ahead and pay it all now, something like that. If you've got somebody like that with narrow parameters as to what their discretion is, they're probably not exempt. I mean, if you've got somebody on the other hand who has got the authority to write off bills for people who are not paying and decide whether or not we're going to turn it over to a collections agency or law firm and things like that, and who is really using their own judgment to make those decisions without some clearly defined, then they might fall into it, but they're typically going to be a billing manager type as opposed to a clerk. Does that help? Not enough? Do you have somebody in mind
No,
that you want to discuss hypothetically?
This is such a great area, such a great area because a lot of the office staff employees.
Most office staff employees don't qualify. They really have to be managing some part of your business, some component of the office operations. So that could be the billing manager, the CFO, the controller, payroll, probably, not unless they have got some managerial responsibility beyond just processing the payroll. I mean, a lot of times when I see payroll, it's the administrator who is, just making sure we're putting the time in properly, then checking the payroll to make sure we're paying it properly, and then calculating the overtime properly. They got to be doing more than that to get into an exempt category.
An office manager.
Mm-hmm.
That's been one that right now my company's going through, I call it a salary exemption test, having everyone fill one out so that we can
Good, that's good, yeah.
identify.
Mhm.
But that is one area because I asked them to list the job responsibilities. Some are non-exempt, some are exempt. They can make decisions of significance on behalf of the company.
And does the office manager not supervise anybody?
Well, it depends on how large they are.
Some of,
office managers,
oh.
the office manager is one person.
Because most of the time office managers fall under the executive exemption, which, because they've got 2 or more full-time people. The office manager still can fall into the administrative exemption, but in that category, if they're not doing more than ordering office supplies and paying the rent and things like that, they might be really more clerical. So that's going to be a tough one. What you might want to do is look to see whether there's additional responsibility that can be added to that person to firm up their administrative exemption. But remember, it has to be real duties added, not just on the job description, because the job description isn't determinative. They will look at the actual employee to see what they're doing. The Department of Labor will. Other questions about that? Keep in mind the burden of proof is on us. When the Department of Labor or the plaintiff's lawyers come knocking, it's our duty to be able to prove that we are in fact exempt.
Touching on your situation, would it make sense to maybe create your office manager 1 position and maybe a level 2, and that level 2 person actually qualifies for the exemption, whereas your level 1 doesn't?
You can, certainly. I mean, you can have different degrees, but typically when you've got level 1, level 2, and on like that, that's because we're adding responsibility as they move up whatever the chain is. And you sometimes in managerial positions, for example, they will move up from a training position that may not be exempt into a managerial position that is exempt. And that could be what we're talking about here if they move from clerical to more managerial. I'm trying to think from an office manager standpoint. I just can't think what else they could be doing that would qualify them as exempt. If they're not supervising employees, I think it's going to be very difficult. Last thing that I want to mention, and then I'll take a question or two and turn it over to Rochelle before I use up too much of her time, is deductions. From an hour on your hourly paid employees, you can't make deductions. I'll listen to this one carefully. You can't make deductions for business items from their paycheck if it takes them below the minimum wage. Now, let me give you an example. You hire an employee to work minimum wage, and then you make a deduction from their paycheck for their uniform. Uniforms are considered a business expense by the Department of Labor, not a luxury item that your employee wants. And therefore, any deductions that you make like that reduce their pay below the minimum wage, now sub-minimum wage lawsuits. I've got several class action lawsuits on this right now. So I don't know how many minimum wage employees you've got or how close to minimum wage you get. These lawsuits are becoming more popular because as minimum wage has gone up, it's getting closer and closer to what a lot of hourly paid people were getting paid before, and of course not many raises these days. So you want to watch that very carefully. With your salaried employees, you really shouldn't be making deductions from their pay, salaried exempt employees, because they are paid on a salary for the work week, not the amount of time they work. Now, there are a few exceptions. If they've got witness duty, military pay, during their first and last weeks, FMLA, you can make deductions. But if I take this afternoon off to go play golf with one of you, my employer could not deduct half a day's pay from my thing. Now, they could charge it to my PTO bank or my vacation bank, but I still need to get my full salary for the week. On the other hand, if I take off Friday completely, a purely personal day, voluntarily to go play golf, and I don't do any work, then you could dock me for that one day's pay. I will tell you, when most employers make deductions from their salaried exempt employees' pay, they almost always mess it up. So I don't think it's a good idea. The full day absence for personal reasons, that was my Friday golf example. If you've got a sick pay policy and the exempt employee exhausts all their sick pay, and then you give them some more time off in full day increments, you can dock that. There is also some ways you can penalize people for safety violations. I don't think punishing exempt employees by pay deduction is a good idea. So I would not do that. All right. Questions? Well, I'm going to hang around for a few minutes. I'm going to turn it over to Rochelle. Oh, I'm sorry.
You talked about for salaried exempt employees.
Mm-hmm.
if there is a day where the company is not open for business, what about policies that require a vacation day to be taken?
You can require, the real test is whether they got their full weekly salary. So if you make them take a vacation day and that means they still get their full weekly salary, then you're fine.
But if they don't have a vacation day left?
Well, I'll give you an example. Well, if they don't have a vacation day left, then you're going to have to pay them. And that comes up a lot. I mean, I've got clients that are doing Christmas shutdowns. And during the Christmas shutdowns, they're going to pay them maybe 2 days of the week for Christmas Eve and Christmas Day, but then they got 3 days left. And if salaried employees don't have PTO left, they're going to end up having to get paid for that week if they do any work. One thing I did fail to mention is with exempt employees, you can not pay them if they don't do any work for an entire pay week. So if your pay week runs from Sunday to Saturday, and they don't do any work during that week, you cannot pay them during the whole shutdown. But if they're returning phone calls and doing emails on their BlackBerries and things like that, it's probably going to be a compensable week.
I'm still a little confused about a salaried driver. What justification can you have for a salary?
Well, you
Is a
can.
salaried exempt?
Well, it's not exempt the way we're talking about exemptions here. It's exempt from overtime. So I think the way that they're doing it is y'all are just basically got them a guaranteed weekly amount. Isn't that what we're talking about? Right. Okay. And so it's just like you're hourly paid, except that they're saying we're guarantee you every week, basically, even if you don't work a full 40 hours, you're going to get $500 or whatever it is.
But if anything over 40, they get overtime.
Well, they're not getting overtime because they're qualifying for the overtime exemption under the for their drivers under the motor carrier exemption. Is that what you're asking about?
I was just a little confused because how you could
Not pay them overtime?
not pay them overtime as a driver.
Well, drivers that are engaged in interstate commerce are exempt from overtime, and that's what they're doing, and probably most of you are doing. Local drivers in small trucks, not exempt most of the time.
So these are the over-the-road type drivers.
Yeah. It's just a different way of paying. They're paying on a salary basis as opposed to an hourly. Most people, I think, pay on an hourly basis because they don't want to pay for hours, or pay on a per mile basis, or pay on an hourly basis because they don't want to pay for hours when they're not working. Yes, ma'am.
Deductions.
Uh-huh.
Okay, can you address, I see this a lot with drivers, when they don't turn their equipment in,
Yeah.
they'll hold paycheck or take deductions for the equipment.
Well, a couple of things. In South Carolina, you have to have written permission, authorization to be making deductions from people's paychecks, or written notice ahead of time that you're going to do it. Secondly, you can't make deductions again if it takes them below the minimum wage. So, you know, even though they may say, okay, you can take all this stuff, unless you, I mean, just losing it or not turning it back in, if it's business equipment, you can't make a deduction below $7.25 an hour in South Carolina, the federal minimum wage. Does that answer that? You also cannot hold paychecks. That's a very good. A lot of people hold your final paycheck until you turn your stuff in, and that's not allowed in South Carolina. Against the law.
Can you do disputed wages?
Disputed wages means you pay them and then you dispute it. You don't really get to withhold anything, so it doesn't really offer you anything. It looks good in the statute, but when you really read it and study it up, it's nothing. I hate to say it.
Even though it doesn't take them below the minimum wage?
Well, under the disputed wages provision, you still have to pay them the disputed amount, but you can then contest it. In other words, you can go to small claims court and sue them for it, which you can do anyway. So it doesn't do you much good. All right, I need to turn it back over to Rochelle. Rochelle Taylor works with me. She's going to be talking about the Americans with Disabilities Act briefly, which is another hot topic, mostly because the law in this area has changed. And just like all of us are now in the protected class, in a protected class, you know, we're all in a protected class, right? White, black, male, female, everybody's in a protected class. Chances are about 90% of you are also disabled under the new law.